Shares of Tesla Incorporated suffered their biggest loss since going public to kick off the second bear market this year, as investors rode a roller coaster over the past week that started with a climb to a record close and was followed by a stock offering, a big bounce, and then an S&P 500 index snubbing. After 8 months of unprecedented gains amid a massive decline in the broader economy that inducted its celebrity founder into the $100 billion net worth club, Tesla has hit the skids. So what happened? If you're a subscriber, well, welcome back to Investing View. But if you're new to this channel and you want to enjoy more of our engaging content, make sure to click that subscribe button and use that trigger finger by smashing that like button. Now let's get into it. The Tesla share price collapsed a further 21% on Tuesday, as investor optimism around the automaker continues to wane. Back from the long weekend, Tesla is suffering an even longer Tuesday morning. The electric vehicle company founded and run by Elon Musk saw its stock crash 15% in pre-market trading on Tuesday, continuing a slide that began last week. Update: Tesla stock wound up falling 21% on Tuesday, the worst day in the company's history as a publicly traded entity. Tech stocks were down significantly last week, with the electric vehicle company leading the way. It declined every day between Tuesday and Thursday. While it closed up 2.78% on Friday, it dropped 7% in extended trading after the bell. While it doesn't explain the entire sell-off, most recent dip during both Friday after hours and Tuesday's pre-trading period can mostly be pegged to Tesla's unexpected exclusion in the S&P 500. The company had been widely expected to join the prestigious Dow Jones Index, which wound up only adding Etsy, Teradyne, and Catalent to the mix. That led to a dramatic fall on Friday that continued on Tuesday. U.S. equity markets have faced heavy selling pressure over the last week, with the Dow Jones Industrial Average, S&P 500, and NASDAQ all falling in that period, in what many have described as a long overdue correction. The tech-heavy NASDAQ 100 has experienced the brunt of this sell-down, retreating from its recently made high of 12,439.48 points to last trade at 11,068.26 points, representing a heavy decline of approximately 11%. Amid this broad market of weakness, many U.S. tech stocks, which had seen their share prices run up to stratospheric heights in recent times, have pulled back significantly. Dow Jones wouldn't explain why Tesla didn't make the cut, but it baffled many observers. Tesla's value had risen 500% in 2020, powered by surprisingly strong sales and its growing battery business. The stock price had soared past $2,000 several weeks ago, before a 5-for-1 stock split took place last Monday that at first increased its value even more. It hit a high of $498 at that point, powered at least in part by Korean retail traders who were buying into the hype. Now the share price is hovering at just over $350. Tesla revealed Tuesday that it had completed the $5 billion stock offering it began last week, so clearly there's a lot of hunger out there for the company's stock. But it was considered an overheated stock by many analysts who saw its growth as unbeatable. Long term, the thought is that its battery business may be more lucrative than its niche car sales. Tesla is now down 30% in September though, and analysts who are bearish on it are for the moment looking smart. The company will look to rebound later this month with its Battery Day, which is meant to show off its latest electric technology. And if the stock continues to fall, Musk can always command people to buy it again once he gets enough Neuralink chips in the heads of brokers and analysts. Tesla went on a monster run since hitting a low point in mid-March, energized by a strong second quarter earnings report and a stock split, among other events. Now, having pulled back from its recent peak, is Tesla stock a buy? The second quarter earnings report was the fourth straight quarter of profitability for Tesla, a requirement it needed for being admitted to the S&P 500, which many expected. It was among the reasons Tesla stock more than doubled since July 1st. In addition, Tesla stock got another jolt after it announced a 5-for-1 stock split on August 11th. Trading began on a split-adjusted basis on August 31st. However, Tesla stock cratered on September 8th after it was denied entry into the S&P 500. Tesla held its highly anticipated Battery Day on September 22nd that failed to meet the heightened expectations of Wall Street analysts, resulting in another sharp drop in Tesla stock. The company outlined how they plan to both increase the range and reduce the cost of a new generation of batteries. But it didn't give the instant gratification the audience wanted, pointing instead to more complex multi-year goals. There was no mention of a million-mile battery that many analysts had anticipated. However, Tesla said the improvements in battery technology will enable it to launch a low-cost Tesla down the road. Quote, About 3 years from now, we're confident we can make a very compelling $25,000 electric vehicle that's also fully autonomous, Chief Executive Elon Musk said at the event. He said Tesla can achieve a 54% gain in driving range. In addition, it also targets a 56% reduction in cost per kilowatt hour. Wall Street analysts wrote about the event with differing views, but one thing seemed clear: Tesla did not exceed expectations. There was plenty of good news in Tesla's second quarter earnings report for investors to chew on. The company reported second quarter earnings of $2.18 per share on revenue of $6.04 billion. Wall Street expected a loss of 12 cents on revenue of $5.12 billion, according to FactSet. This happened despite its main manufacturing plant in Fremont, California was shut down for about 6 weeks during the quarter. That was due to local officials mandating the closures as the coronavirus was in full swing. Tesla has since returned to full production of its Model 3 and Model Y. Equally significant, Tesla is installing additional machinery at the Fremont factory. Tesla thinks it might be able to produce more than 500,000 units per year. The company also said the Model 3 has received a strong reception in China. It makes the Model 3 at its factory in Shanghai. Tesla is also in the process of building a plant in Berlin and another near Austin, Texas. Tesla stock gets high composite rating. The rating means Tesla stock currently outperforms 99% of all stocks in terms of the most important fundamental and technical stock pricing criteria. The stock also has a relative strength rating of 99. The rating tracks market leadership. It shows how a stock's price movement over the last 52 weeks measures against that of other stocks. Tesla's relative strength line is currently on a downward slope, a negative sign. The relative strength line tracks a stock's performance versus the S&P 500 index. Typically, the RS line of the strongest stocks is either confirming or leading a stock's price into new high ground. In the stock market, timing is critical. So when you're looking for stocks to buy or sell, it's important to do the fundamental and technical analysis that identifies lower risk entry points that also offer solid potential rewards. Tesla's recent $5.0 billion on-market share sales, announced in late August, may have contributed to the recent share price weakness. In an SEC filing released Tuesday, September 8th, Tesla said it had completed this on-market share sales on September 4th, while noting that the final settlement of the shares sold is expected to be complete by September 9th, 2020. Are competitive pressures soon to emerge for Tesla? Elsewhere, a multi-billion-dollar deal between electric vehicle maker Nikola and stalwart General Motors. Under the deal, it was revealed that General Motors would receive a $2 billion equity stake in the company, representing 11% ownership of Nikola. In return, it was noted that GM would engineer, validate, homologate, and build the Nikola Badger for both the battery electric vehicle and fuel cell electric vehicle variants as part of the in-kind services. Nikola expects to make $5 billion in total savings as a result of this deal. Bloomberg described this news as a match made in Tesla hell, arguing that the GM-Nikola partnership produces a formidable competitor for Tesla. What do you make of Tesla's recent share price weakness? Are you bullish or bearish on the company's long-term prospects? Whatever your view, you can use CFDs to trade both rising and falling markets, including Tesla and other auto stocks, through IG's world-class trading platform now. However, Tesla stock is currently not a buy. The stock has been on an enormous run since hitting lows in mid-March, occasionally disrupted by sell-offs. The most recent breakout had a buy point of 359.1 and climbed 40% from that point to a record high of 502.49. But that breakout ultimately failed as the stock took a deep dive. Tesla stock recently rebounded, but is now 13% above the 50-day moving average and extended. Currently, there are no obvious buy points. What can you say about Tesla stock price crashing? Let us know in the comments section below. And hey, if you've enjoyed the video, don't forget to like and subscribe to our channel so we can continue giving you the best content. Thanks for watching, and we'll see you in the next video.